The debt ceiling is a uniquely American concept that has been in existence for over 100 years. It was put in place during World War I in 1917 to allow the US government to borrow without specific congressional approval as long as the overall debt was below the ceiling. That ceiling was set at $1 billion. Since then, the debt ceiling has been raised multiple times. Since 1960, it has been raised as many as 78 times, in fact. Each time, Congress had to agree on the increase, often leading to protracted negotiations. The last time it was raised was on the 16th of December 2021, and it currently stands at $31.4 trillion. So how much is the US debt right now? Well, the US government operates on a deficit and has for some time. What that means is that its expenses are more than its revenue and it has to borrow the rest. There are some key events that have resulted in a significant expansion of US debt over the past 20 years or so. In fact, since the turn of the century, there are a few events that have led to a large spike. Those occurred during the wars of Afghanistan and Iraq, the 2008 financial crisis, and also the COVID-19 pandemic. In fact, in 2017, the Trump government's tax cuts pushed the debt higher by as much as $20.2 trillion. According to US government data, the US national debt currently stands at $31.46 trillion. Now, what happens if the ceiling is not raised? Officials at the Fed and also of the US Treasury have already been planning for prioritization, having drafted a blueprint during the debt crisis of 2011. This would require continued issuance of debt paper and also tactical management of the cash that the government has. But US Treasury Secretary Janet Yellen has stated that the government will likely run out of extraordinary measures by October 18th this year if Congress does not raise or suspend the debt limit. Now, is there a silver bullet? Is there a workaround? Maybe not, but there could be a $1 trillion coin. One of the theories that has been propounded suggested that the US Treasury could mint a very valuable coin, and that coin can then be deposited in the government's Federal Reserve account. The government would no longer then need Congress's approval to raise funds. In fact, it wouldn't have to borrow at all. Now, another workaround is the 14th Amendment to the US Constitution, and in that, the US Constitution states that the validity of the government's debt shall not be questioned. Now, Biden's administration could potentially pass an executive order citing the 14th Amendment, but that, in fact, could be challenged in court. And even Janet Yellen has said that these are not real solutions. She has, in fact, dismissed the coin idea as a gimmick. Now, what if the US defaults on its debt? In a word, it would cause Armageddon. A global financial crisis is par for the course, and other governments hold as much as $6.85 trillion of US debt. The dollar would definitely crash, and that would result in significant losses to several governments worldwide. Global trade would likely screech to a halt, and prices of key commodities, including crude, would certainly crash. Now, the aftershocks would be felt also in the equity markets, including ours here in India. But will the US default? It's clear that US Congress is well aware of the implications of not raising the ceiling. It is just a matter of time, in fact, to see who blinks first. The Republicans are calling for spending cuts, and the Democrats have held firm so far. But initial signs are pointing to headway that has been made, and a deal could in fact be imminent.